it's Bob Hoopsher, and this is the Gaining Perspective podcast, where we bring you insightful conversations with some of the top thought leaders in the investment advisor profession and investment management industry. I am the founder of Advisor Perspectives and a vice chairman of Vetify. Advisors are increasingly shifting away from a traditional 60-40 portfolio as they realize the full potential of alternatives and the benefits they can provide for their clients. Yet, despite increasing demand, hurdles to accessing and understanding alternative investment strategies still exist. My guest, Abby Salameh, will leverage findings from the CAIS-Mercer second annual survey, which was conducted at the second annual CAIS Alternative Investment Summit last month, to expand on the shift that's taking place as investors adopt a modern three-dimensional portfolio, the challenges that advisors continue to face when accessing those investments, and how technology platforms like CAIS are addressing those hurdles, as well as her outlook for the alternatives industry in 2024. Abby is the Chief Marketing Officer and Head of Strategic Relations for CAIS and Managing Director of CAIS IQ. So, Abby, I know you've been on this podcast once before, but tell me about your career path, what led you to CAIS, and your role there.
Yeah, thank you so much. Thanks for having me, Bob. It's great to be back. So, what led me to CAIS was having grown up in the independent advisor land and building advisor businesses. I saw firsthand the struggles that independent advisors had with accessing, diligencing, investing, and then monitoring alternative investments. So, when I was thinking about something that I thought would be interesting to do, um, alternative investing came to mind because I saw those challenges. And then a firm like CAIS that really bridges that gap through scale and technology just seemed like a great next step for me in my career and learning something new. And it's been super fun and exciting.
For our listeners who are not familiar with CAIS, what does the platform provide? What is the problem that it solves for advisors? And also, since we're talking about alternative investments, what falls under your definition of alternatives? What are the types of investments that the CAIS platform handles?
Yeah, no, thank you. So I would say that there are a few things that CASE solves for. First and foremost, we are a purpose built platform for the independent wealth ecosystem. So we really built the platform with the independent advisor community in mind. And the platform itself is twofold. On one side, we have our marketplace, which is a slew of alternative investments on one side that we not match up, but that we bring to forebear for independent advisors on the other side. And those products include everything from hedge fund to real estate to private equity, private credit, private debt, all the private market funds that you could imagine. In addition to some interval funds and REITs and other types of investments. So it's a broad category, and we really help advisors find what they're looking for by first laying out what they're seeking to achieve. So it's very outcome oriented and it's very intuitive. So an advisor can come into the platform at no cost. They can research the different funds available on the platform. They can diligence them because we outsource all of our due diligence to Mercer, which is the largest institutional consultant for alternative investments. And they can also get educated. Then, through our technology, it's a digitized transaction process. So you don't have to fill out a 30-page subdoc. And then we connect the ecosystem. So we connect the pipes with all the custodians and the reporting providers to make it easy for the advisors to then access and monitor the alternatives that they've bought for their clients. On the other side, we have Case Solutions, which is basically the technology that we use in our marketplace, but it can be broken apart and used in many different ways by firms that just want to use certain pieces of the platform.
Let's go back to the survey that I mentioned in my introduction, the survey you did together with Mercer. What are some of the challenges that advisors are facing when they look to increase their allocation to alternatives based on your findings?
Yeah, well, it's interesting because despite the demand for alternatives, over 85% of advisors that were surveyed said that they planned on increasing their alternative investment allocations in 2024. But even with that, there's still hurdles. 55% of the survey respondents cited that high levels of administration and paperwork were big barriers, which of course is something that CAIS helps remove from the equation. And then they cited lack of liquidity with some private market funds, which is true, but now alternative asset managers are putting different wrappers on products to help with that liquidity risk. And then also due diligence and compliance. So the due diligence we feel very strongly about. Obviously, we spend a lot of money partnering with Mercer to do all the due diligence. But those were the three biggest barriers to entry that we heard, which differs slightly from what we heard last year, which was more around education and access. So it's interesting to see how that dynamic has shifted a little bit.
So, education is playing a slightly smaller role in standing as an obstacle to acceptance. What do you attribute that to? Why education improving?
Well, I think a number of reasons. First and foremost, obviously, there's more education around alternative investments these days. Even from our own Case IQ tech enabled education platform, there have been a lot of other forward movement in educating advisors about alternative investments. If you look at the largest alternative asset managers like Apollo and Ares, they've actually built out their own universities for alternative investments because they also saw that education was a big barrier for advisors to investing. So I think there's more resources available to advisors today than there were a year ago to help them feel confident through education in incorporating alternatives into their clients' portfolios.
Looking at the advisors who have allocations, particularly those that have increased their allocations, what has been the impact on their bottom line for their clients? How has it enhanced their clients' portfolios?
Yeah, so I mean, I can't say specifically what that outcome has been. I do know that we've run a lot of models internally to check that out, and they all prove out that the inclusion of alternatives definitely outperforms your standard 60/40 portfolio. There was a research report done by Advent, which is SS&C. I don't know if you're familiar with them. This research suggests that alternatives offer a better risk adjusted return than traditional assets. Adding just even 20% of alternatives to a balanced portfolio had the increased it expected returns by about 50 basis points per annum. So that's a pretty hefty number. And I think that what we found is that in today's volatile and sometimes trying markets, looking for a diversified way for the outcomes is why most of the advisors that we work with are starting to include more alternatives in their client portfolios.
Well, a little bit of history here. I have been an entrepreneur for most of my career. One of the businesses that I founded and created starting in about 1990. I ended up selling to Advent, and that business now still exists as part of SS&C.
That's so funny, right? They have bought a lot of businesses, that's for sure.
And there's actually a company that I worked at before that that was sold to eventually became part of SS&C. So two of the businesses that I've created as an entrepreneur now exist as part of SS&C. But we'd love to provide a link to that research in the notes that accompany this podcast. So we'll get that from you. Why are alternatives so important in the market now?
It's interesting. Like we said, all boats float in high tides, right? So we enjoyed a decade of high returns from many different asset classes, and it was only in the last couple of years that I think people started looking to diversify away from those traditional asset classes. And what's even more interesting is that younger Americans and investors seem to be gravitating in greater numbers to alternative investments. Something like in a Bank of America study, 75% of Americans between 21 and 42 years old don't think it's possible to achieve above average returns solely by investing in traditional stocks and bonds. So that's a huge number if you think about it, 75% of Americans. Now, I don't know if those are the dinks that everybody's talking about, the double income, no kids, or maybe the Henrys that people talk about also. But that's a fairly telling sign that alternative investing is certainly becoming more mainstream. And one can only assume that it's because of the diversification that they bring to the portfolio.
What else do you think it is about younger investors? Are they just more inclined to take risk? Are they less sophisticated as in terms of their scrutiny that they would apply to investment products?
We don't really study them that much, but from everything I've seen, they seem to look to investments like private equity, commodities, real estate. They're more open to ideas than some of the other generations. I mean, what we saw in our recent survey that the advisors were investing for their clients, the majority of them just this past year, 96% of them were investing in real estate, which was interesting. Private equity was right behind that at 93%, and private debt was 91%. So it's been super interesting. And then coming into 2024, like 7 out of 10 of the respondents suggested that they plan to increase allocations to private debt and private equity in the next 12 months. So kind of gives you a sense of what the trend is and what we're seeing through the CAIS platform.
So we've had an economy that's actually grown pretty strongly over the course of this year. We're recording today on December 12th, and we've had, I think, GDP growth of 2%, 2.1, and 5.2% through the first three quarters, if my memory serves me. How has that macroeconomic environment impacted the flow of funds into alternative products?
Well, I can just tell you that our flows on the platform itself have been more than doubled since last year. And whether that's a function of case being more well known, or whether advisors are feeling more confident, or whether asset managers are doing a better job in hiring salespeople and distribution teams to be out there selling their products. We have certainly seen that as indicated by transaction volumes and new client acquisition to the platform itself. In addition to some of the largest independent broker dealers that have signed on to use CAIS as an exclusive alternative investment platform for their advisors. Firms that may not have ever allowed their advisors to invest in alts before are starting to rethink that because they're going to lose advisors if they don't offer that service.
Yeah, I should also mention it's also impressive given that traditional asset classes, equities and fixed income, have done pretty well this year. So, despite that, there's still been a good shift to alternatives.
Yeah, 100%.
What are some of the trends that you're seeing in allocations to specific products? You've mentioned private equity, private credit already, but which products are in the spotlight as we head into 2024?
Well, we can't really talk about products because they are private market funds. So we have to keep that behind our gated wall. But I'm happy to direct you to the CASE platform. And if you are approved to enter the platform, you can see all of this. But we did see that 65% of respondents said they were allocating to private equity to enhance returns, while 41% of respondents said that they were allocating to private debt to supplement income. So, you can see that there are two different outcomes that advisors are seeking for their clients that will determine which asset class they are investing in. And most of the advisors that were investing in real estate said that they were looking to diversify risk and supplement income. So, it really is just depending on the outcome that you're seeking for the client that you're working with.
So, how can advisors learn more about the CAIS platform? And also, what are the fees on the platform? And as part of that question, what are the fees on the alternative products on your platform?
So, coming into the CASE platform and accessing any of the funds and transacting the funds is no charge to advisors. We also have NTF agreements with both Pershing and Fidelity. So any of the funds that you buy through those platforms and the CASE platform are no transaction fees for the advisor. So really bringing that level of access to the advisor at a very low cost, if no cost, to ensure that there's easy access for them to get the diversification that they need for their clients. And, to find out more about CASE, you could just go to our website, which is casegroup.com. And you'll find everything you need to know about alternative investments and alternative investing, and how we are trying to make it as easy as possible for advisors to incorporate these needed strategies into their clients' portfolios.
One part of the question I want to see if you can give us any light on the fees that the investments themselves are charging. Do you provide any data on that?
We don't, because they vary fund by fund, so they are very different, but they really do vary from fund to fund, and it's important for advisors to understand what those fees are when they look at the fund themselves.
Fair enough. If there's one key takeaway that you'd like to leave with our audience of advisors about how they should evaluate alternative investments, what would that be?
I would say it's important to understand your client's needs and their outcomes. And then, if looking to incorporate alternatives into a portfolio and a sleeve of alternatives into a portfolio, work with a specialist that can help you understand alternative investments. We've got an army of product specialists that help advisors, and just educate yourself on what these products are, because some of them can be very complex and it's important to understand them.
Terrific. Well, we'll include some links in the notes that accompany this podcast where you will be able to learn more about Abby and her team and the CAIS platform. There'll be a link to the CAIS website and a link to the CAIS brand refresh press release. We'll also get a link from you about that study that was released by Advent. Abby, is there anything else you'd like to add?
No, just thankful to be here. Thank you so much. And I hope you have the happiest holidays.
Likewise. And thank you for listening to the Gaining Perspective podcast with Bob Hoopsher. Today featuring Abby Salameh of CAIS. To support our podcast, please share, subscribe, or leave a review to help make our podcast more findable for your friends and colleagues. You can subscribe to Gaining Perspective on your favorite podcasting service.